The market does not move randomly. It moves according to a cycle that very few understand. Balance, imbalance, and rebalance. Greetings, dear friends. I am one monologue, and as always, all thanks belong to the Almighty God, the one who has given us breath, life, and every opportunity to thank Him. Dear friends, in trading we do not rely on certainty, but on the past history of the market. No one knows the future. Anyone who speaks with certainty is lying. Everything has a probability. Treat your portfolio like a shop, where profits are the positives and losses are the expenses of the business. Always ask yourself, how much have I invested? How much do I expect to earn from this business? No one became rich overnight, but many have been burned. They have lost and learned. Let us enter the topic. In trading, we do not rely on luck, but on market structure. When you look at the chart on a higher time frame, it looks like one big balance. But when you look at lower time frames, you see many aggressive changes. There you see balance, imbalance, and rebalance in the form of steps. Balance is the moment when the market is at peace. Price moves slowly inside a zone. Buyers and sellers are in equilibrium. Here, there is no direction. Here, there is no power. And many traders lose exactly here because they look for movement where the market is resting. They enter without a signal, without a reason, and they exit with losses because they do not understand that even doing nothing is a decision. Then comes imbalance. Here, everything changes. One side takes control. Price explodes, moves fast without returning. Gaps are created, imbalanced zones, places where the market did not move fairly. And these zones are footprints. They are proof that the market moved with force. But what many people do not understand is that the market always comes back. Not because it changed its mind, but because it seeks equilibrium. Rebalance is the moment when the market returns to fill the gap, to correct the imbalance, and to continue the cycle. And exactly here, real opportunities exist. Not in chasing, but in waiting. Not in emotion, but in understanding. Let us take an example. The market makes a strong move, creates an imbalance zone, and leaves. Most people enter here. They enter because they see strength, but they do not understand timing. They buy when price has already moved away, and they sell when everything is already finished. While a disciplined trader waits. He waits for the return, waits for the rebalance, waits for price to come back into the zone, and only then thinks about an entry. Because an entry is not a decision of the moment. It is the result of waiting. It is the result of understanding. For example, I personally like 1 to 2 as risk. I am not against earning more, but I am against destroying the process. Because many risk 1 and take less than 1. And this they call management. But it is not management, it is fear. They close the trade quickly from fear of losing profit, but they forget that this destroys the ratio, destroys the logic, destroys the probability. Because if you lose 1 and win less than 1, even if you have many wins, you will still stay behind. This is mathematics, not opinion. Real management is when you respect the plan, when you accept the risk and give the market space. Because if you do not allow the market to breathe, it will throw you out too early. Another big mistake is time frames. Many people make decisions on small time frames without seeing the bigger picture. They see one candle and think they understand the market. But the market is not understood in one moment. It is understood in structure. Higher time frames are the foundation. They are the direction. They are the map. That is where you understand where you are. That is where you understand what is happening. While lower time frames are only entries, they are only the moment. They are only confirmation. If lower time frames are not aligned with the higher ones, then you do not have probability. You only have hope. And the market does not reward hope. It rewards alignment. It rewards discipline. It rewards patience. Because in the end, everything returns to probability. And probability is not built in one moment. It is built through repetition. The market repeats itself. Patterns repeat themselves. Mistakes repeat themselves. And if you repeat the correct process, results will follow. Because as it has been said, we are not what we do once. We are what we do consistently. Discipline is not one single decision. It is a habit. And in the market, you are what you repeat every day. If you repeat mistakes, you will receive losses. If you repeat the process, you will receive results. Balance, imbalance, rebalance. This is the cycle. This is the rhythm. This is the law. If you understand this, you will no longer chase the market. You will wait for it. You will wait for the moment when structure is on your side, when time frames are aligned, when the zone makes sense. And then entry is no longer difficult. It becomes clear. It becomes simple. Because in the end, the market does not reward the one who runs, but the one who waits and respects the process.